Hello and welcome to the program. I'm Chimeze Obi Iwagu. We tee off the show with market numbers here on the African continent. Two of the major markets we track were in the red at intraday. The JSE index in South Africa was down the most by 0.42%, while Nigeria's index was marginally lower by 0.02%. Elsewhere in the region, the market in Egypt is closed today after yesterday's public holiday, but ended Wednesday's session negative by 1.1%. Kenya ended Thursday's session positive. In the meantime, major markets we track in the Gulf region closed for the week negative on Thursday. Saudi Arabia's index lost the most by 1.07%, while the Qatari index fell 0.27%. In the UAE, the Abu Dhabi index declined 0.60%, while Dubai's index trimmed 0.56%. And in Europe, stocks opened slightly higher on Friday morning, with investors' attention turning to economic growth data as well as corporate earnings. Let's get to hear more from Conrad. Hello, Conrad. Good afternoon. Thank God it's Friday.
Good afternoon, Jimmy. What a joy to be back on the air with you. And I must say, I really love your outfit today.
Thank you very much, Conrad. I appreciate it. Anyway, let's look at the growth numbers out today. The German economy is struggling to rebound from the coronavirus crisis, and that's according to the latest GDP numbers. Now, the country's GDP fell during the first quarter as Germany is dealing with a devastating third wave of the pandemic. The big question now is, how is the current quarter going? Are we seeing a recovery somewhere? And if so, where?
Yes, 1.7% was the decline of Germany's economy in the first quarter of this year. Everyone, of course, had hoped that we would see more of a rebound at the beginning of 2021, but it's not so. The rebound is happening right now during the second quarter. We are seeing early signs of it. Positive business sentiment, many orders that the businesses, that the factories have to work on. So at the current rate, we should see growth of around about 2% in the current second quarter, and then greater growth rates towards the end of the year. That's at least what everyone on the market is hoping for and betting on. That's why we've seen all those record highs on the stock markets.
All right, let's look at the markets proper now. Germany and Europe's largest chain of laboratories, SYNLAB, has done an IPO today. How did that go?
It did go okay, I'd say. The shares had to be sold at the lower end of the price range that SYNLAB originally targeted. So investors were not really overwhelmed. But I have to say, it's really positive that we see a technology firm go public here in Frankfurt, a company that has to do with biotech firms, with the pharmaceutical sector here in Germany. That's really a booming part of Germany's economy, and it's really positive that we have this IPO happening here. The first trading day is a bit shaky. We have to, give this share a bit of time also and take a look at how it's doing during the upcoming weeks or so.
And earnings season is still ongoing. More banks have come out with first quarter earnings reports. There are also earnings from AstraZeneca, MTU Aero Engines, Schindler, the maker of elevators, Amazon and Twitter. What sticks out?
Yes, I find a nice play with words today. Schindler, the elevator maker, lifted its outlook for the year, and that's as a consequence, the share price of Schindler is lifted too. You mentioned other companies, a couple of banks reporting relatively strong earnings. We've seen strong earnings from many banks, including Deutsche Bank. Now today, BBVA from Spain, Barclays from the UK, both reporting strong earnings. A surprising set of positive numbers from Swiss Re. We also have, you mentioned AstraZeneca. We have $1 billion takeover. Nestlé, from Switzerland, the large food company, wants to take over for $6 billion nearly the company, the Bountiful in the United States. So lots of activity on the trading floors, lots for the traders to digest this Friday. Thank God it's Friday.
Thank God it's Friday, Conrad, and it's been a great week with you. Enjoy the rest of the weekend, and we hope to see you soon.
Thank you, Jimmy.
And in London, the FTSE 100 index was up 25 points in early trading with a slew of earnings reports. Pharmaceuticals firm AstraZeneca was the top riser, nearly 3% after reporting better than expected results this morning. Total revenue jumped 15% to $7.32 billion, including $275 million in revenues from its COVID-19 vaccine. Let's hear more from Juliana. Hello, Juliana. Good afternoon. Well, more earnings coming in. AstraZeneca reporting better than expected results, and Barclays was the top faller in the morning, down over 5% despite beating forecasts by more than doubling its pre-tax profits in the last quarter. How are these numbers shaping the numbers this intraday?
Yeah, good afternoon, Chimese. Well, the FTSE is in decent shape at intraday. It's dropped slightly. It looks as if it could potentially be heading into the weekend in the red. As you said, it is still results season, and the top riser being AstraZeneca. No surprises that the pharmaceutical giant is in good shape after reporting a profit surge between 11 to 13%, which is pretty decent, considering, even though, of course, they have been one of the top names when it comes to this vaccination drive that's been going on across the world. They have got themselves in lots of trouble, particularly with the EU. They're still in a legal battle about distribution, and that spat between the bloc and Britain. And of course, there was a little bit of controversy over some rare blood clotting. But yep, they're in good shape going into the second quarter. The FTSE All Share is up 0.15% at intraday. The FTSE 100 is up 0.20%, and the FTSE 250 is up by 0.16%. In the currencies market, the British pound is down on the US dollar today by 0.14%, up on the euro, though, by 0.05%, and down on the Japanese yen by 0.28%.
And Darktrace, British cybersecurity firm, made its debut on the London Stock Exchange. How are the shares doing on its first trading day?
Exceptional. They're doing very, very well. Last time I checked, I believe their share price was up by about 42%. This is a really good day for British business, especially if you consider what happened at the last massive IPO, which was Deliveroo last month, which disastrously flopped on the first day of trading. Not to be the same for Darktrace. I believe their bosses decided to go a bit lower with the opening share price, just to not go into that same box as Flopperoo. The shares were at about 250 pence. I think now they're trading at about 350 pence. This is a great day for them. They are a cybersecurity firm that use artificial intelligence to track viruses and also to track hackers. They've been doing exceptionally well during the pandemic, as lots of firms, of course, have been asking their staff to work from home. So they need this sort of data. So now the firm is worth £2.4 billion, and it started at a £1.7 billion market capitalisation. It's a great day for them.
And we say thank God it's Friday, so what should we expect next week?
Yeah, I joined you and Comrade in saying thank God it's Friday. It's a short week on Monday. Markets are closed here in London, but still not short of corporate news next week, starting on Tuesday, where we'll be getting that final PMI update on the manufacturing services and construction sector, 50 being that key number. We're expecting to see figures of 60 and above, showing that the economic activity in the UK really has rebounded post-pandemic. And then, all importantly, Thursday, the Bank of England are going to be giving a Monetary Policy Committee update. Currently, interest rate 0.1%, quantitative easing at £865 billion. There have been some suggestions that perhaps interest rates could even be rising. I doubt that will happen, but it just shows you how far we've gone with the fact that, you know, earlier this year, Chimese, we were talking about the fact that in this country, interest rates could go into negative territory. That certainly won't be the case, but we are expecting to hear a change of tone about the outlook for the year in the UK. The last time they spoke, they said they expected growth of about 5%. We're expecting that to increase by about 7%. So I'm sure we will be chewing on Thursday afternoon their minutes once they are given.
Quite a lot to chew there. And we hope to see you on Tuesday while you enjoy your holiday.
Thanks, Jimmy.
And in Asia, markets struggled for gains on Friday as investors turned cautious despite a positive finish stateside in the previous session. Australia's ASX 200 fell 0.7% as all sectors turned red. The Japanese market returned to trade after a holiday closure on Thursday. The benchmark Nikkei 225 was down 0.43%, while the Topix index traded near flat. In South Korea, the Kospi index tumbled 0.52%, while Hong Kong's Hang Seng index was down 1.31%. The Chinese mainland shares also fell. The Shanghai Composite declined 0.53% after market open, while the Shenzhen component was down 0.3%. And futures contracts tied to the major U.S. stock indices slipped early Friday as investors poured over a flurry of earnings results and a robust profit beat from e-commerce giant Amazon. Contracts tied to the S&P 500 fell 0.36%, while those linked to the Dow shed 0.24%, and Nasdaq 100 futures also dropped about 0.48%. The after-hours move came amid a deluge of earnings activity after the close of regular trading. Amazon, the last of Wall Street's mega-cap tech companies to publish results, reported that first quarter profit more than tripled to $8.1 billion, and January to March sales soared 44% to $108 billion. And oil prices slipped in early trade on Friday, taking a breather after touching their highest in 6 weeks as concerns of wider lockdowns in India and Brazil to curb the COVID-19 pandemic offset a bullish outlook on summer fuel demand and economic recovery. Brent crude fell 0.4% to $68.27 a barrel. The last day's trading for the front-month June contract, while U.S. West Texas Intermediate crude for June was at $64.66 a barrel, down 0.5%. Brent is on track to gain roughly 8% in April, while WTI could see gains on nearly 10%. And gold prices fell in early trade on Friday and are on track to post their worst week in a month as strong U.S. economic data and elevated Treasury yields weighed. Spot gold slipped 0.3% to $1,765 per ounce, down nearly 0.6% so far in the week, while U.S. gold futures were down 0.1% to $1,765 per ounce. Among other precious metals, palladium fell 0.1% to $2,948 per ounce after hitting an all-time high of $2,981 on Thursday. Silver fell 0.7% to $25.89 per ounce, while platinum was up 0.2% at $1,200. And in Libya, the oil minister says achieving the country's oil production target of 1.5 million barrels per day by the end of 2021 depends on the swift approval of the national budget by Parliament. According to the oil minister, the adoption of the budget for the Libyan state and the oil sector in particular has been delayed after it was rejected in March by the Eastern-based Parliament, demanding a revised budget with less spending. Libyan oil output crashed last year when forces allied with Eastern Commander Khalifa Haftar blocked exports to put pressure on the Tripoli government. However, oil output rebounded to about 1.3 million barrels per day after the fighting stopped. Starting off this segment in Kenya, where the Capital Markets Authority recently released its first quarter 2021 report showing that Nairobi's Securities Exchange recorded a 20.88% increase in market capitalization to 2.43 trillion shillings from 2.01 trillion shillings recorded in the first quarter of 2020. Let's talk more about this with George Bodo, the Chief Executive Officer at Core Street Research and Analytics. Good afternoon, Mr. Bodo. Thank you very much for joining us. It's great talking to you.
Good afternoon.
Now, the market capitalization on the NSE recorded a 4.29% increase that was in first quarter of 2021 from what was recorded in the fourth quarter of 2020. What would you say were the major factors that drove this rise?
There was a general increase in prices in the first quarter of the year. And if you can look at, for instance, the Nairobi Securities, the All Share Index, it was up about 2% in the quarter. And this is a summation of all the companies that are listed and form the market capitalization. So you could see that while the all-share index was up 2%, it triggered that 4% up growth in market cap. Because also during the quarter we didn't have any listing during the quarter. However, the Nairobi Securities 20-share index, which is probably like an index of the 20 more blue chip stocks, was down actually. On the contrary, and this is because a number of the banking counters which form on the back of the index was still recorded a negative performance in the quarter. While the biggest component of the index, Safaricom, was up 6%, the banks were down. So this is why the index, well, overall the prices were up, but the blue chips were still underperforming during the quarter.
But how much of foreign investors and domestic investors would you say were in the market in the quarter on the review? For them, what was the major attraction there?
Foreign participation was fairly stable at 60%. It averaged about 62-63% in 2020. In Q1 20, it was about 65%. So it was about 61%. And this quarter it was 60%. So there was a bit of stability. Of course, 2019 it was about 65%. So there was a bit compared when you look at 2019, the pre-pandemic, it's a bit down 400 basis points. But overall, the participation was very stable. But however, I need to point that they were largely net sellers especially on the four main counters they love, which is Safaricom, East African Breweries, Equity Bank, and KCB. They were largely net sellers on those four counters.
Yeah, in every market, a lot of investors look out for the banking stocks. How would you say that the banking sector actually performed in that market in the quarter under review?
The banking stocks, as I said, underperformed. I think during the quarter, the average return was about almost 1% on average, which is because, of course, banks are going through a rough time and investors continue to discount banks on this basis. If you look at, for instance, the 2020 results, net earnings for the sector was almost down 20% year on year. Return on equity was almost below 15% across most of the big banks. You look at 20% in 2019. Quality of loan books significantly deteriorated. So investors have continued to discount banks, and I think they're likely to continue discounting banks this year on the basis of the fact that most of their problems have not gone away.
So what is your outlook for the market in the second quarter of 2021 and, of course, the rest of the year?
Yeah, so I think for the second quarter, you're still likely, the market is likely to post marginal gains on the back of, I still see about 2 to 4% performance in the Q quarter because nothing much has changed across board. The economy is still frozen. Most parts of the economy are still frozen. Foreign investor participation is still, I'm still seeing at 60%. There's likely to be less volatility, as a continuation of less volatility into Q2 from Q1. But the thing is that there's no major news to excite the market. There's no IPO coming up. There's no secondary listing coming up to excite the market. So I think I'm still likely to see what I call a business as usual performance for the market in Q2 and even for the rest of the year.
All right. Thank you very much, Mr. Bodo, for your time on the program today.
Thank you.
And the African Development Bank and the International Fund for Agricultural Development, in partnership with the Forum for Agricultural Research in Africa, have pledged to work closely with African leaders to address rising hunger on the continent and shore up adequate financing to transform and modernize Africa's food production. According to the AFDB President, Dr. Akinwumi Adesina, getting new and appropriate technologies into the hands of African farmers is a key part of addressing Africa's agriculture and food security needs. He says that unless a strong collective resolve is shown and ambition is turned into reality, Africa will be confronted with enormous food shortages. Across the continent, hunger poses an even greater risk than COVID-19. The number of people living with hunger increased from 214 million to 246 million between 2015 and 2020. And the Ghanaian government says it will provide bridge financing for Airtel Tigo, the mobile operator it bought for $1 billion in order for the telco to reach profitability within 2 years. According to the Minister of Communications and Digitalization, the country is also considering giving a sovereign guarantee to help the service provider secure funds from other lenders. The government is also renegotiating some of the company's short-term loans after its former shareholders wrote off the debts they were owed. Ghana acquired Airtel Tigo this month from Bati Airtel and Millicom International Cellular SA, which had combined their location operations in 2017. And Tanzania expects to conclude an agreement for a $30 billion liquefied natural gas project within 6 months after the country's new president called for a resumption of negotiations that has been delayed for more than a year. According to the Tanzanian Petroleum Development Corporation, the government's negotiation team has already been formed ahead of the resumption of talks with investors. Investor sentiments in Tanzania soared after the administration of former President John Magufuli overhauled mining legislation and ordered the renegotiation of contracts. The project partners include Equinor RSA, Royal Dutch Shell, ExxonMobil, Offer Energy, and Pavilion Energy. And that's it on the program for today and, of course, for the week. Thank you for watching. I'm Chimeze Obi Iwagu.